Good afternoon, everybody. It is Friday, May 4th, end of the week. Interesting week for sure. Have we been warned? Has the top been in? That's the question we're gonna have to start asking ourselves right now. We are getting to the tail end of earnings season. That'll be next week. We obviously had the number today. Fine, a little worse than expected, but reacted very poorly. And this has been sort of a little bit of a theme the last few days. We've been noticing that there's lack of leadership. The banks are breaking down. Some of the high beta stocks we always love, a la Apple, cannot really find any base, and they're breaking some key supports. The key is this rollover going to last, and how long is it going to last? Because right now we obviously are breaking some key moving averages, certainly on the S&Ps, and certainly on a number of stocks. And that does concern me a little bit. Let's take it to the charts and see what we have this morning or this afternoon. So you can see the spiders. I have a daily chart up right now, and we're not quite at the level where I'm concerned on the macro level, on the macro scale, but on the micro, I am a little concerned. I don't like seeing this. At this point, I would look at 3550-ish, maybe you could say 3570. If we break that, we probably head a decent amount lower. And I would say the next resistance after that would probably be around 133 is light support. But that would be breaking some key moving averages, which is never a good sign. Some charts, we could start off with Apple. Could not find support at its 50-day, broke it. And at this point, everybody's like, where's the next support level? To me, 560 is some support. 555 is that breakout that happened. You can see going back to early March or late February, you're looking around 548, so 550-ish could be some real support. So if we get down there, I'll certainly be buyable. Do I think we're going to get a bounce before then? Certainly possible. Right now, we're not showing good strength overall. A few of the key things that I'm still seeing strength in is Amazon. I like to see it pull back to the moving average, which would be the 8-day moving average right now, 220-ish. That will probably be viable the first time it tests that. Expedia, same type of play. First time it tests that 8-day moving average should be viable. But some of the stuff that, understanding Amazon and Expedia, they haven't really gone anywhere this year except after earnings. So they have room to move or digest, certainly. Some of the stuff that has had tremendous earnings, a lot of what's happening is the news is already built in. Even if they come out with good earnings, and it's sell the news reaction. We saw it this week in MA. Decent earnings, right at the top end of its range, has come down. It's now, again, not broken on any long-term measure. Not saying it's a short down here, but it did not make new highs. In fact, it sold off after earnings. And at this point, it is below the 21-day moving average, which you really don't want to see it sit there but for that much of a period of time. Another stock, CMG. I'm short a little bit, but it's a little bit of an ascending channel that, or ascending channel that normally works itself to the downside. Best in breed. It's a great stock. At some point, it's certainly going to be buyable, but look at 400 as some support, and then maybe you're talking almost 385 as the next level. We'll have to see if these high beta stocks actually keep coming down. Next week, I believe it's the 9th. We have Priceline. That's going to be the telltale. I'm sure it beats. That's what they normally does. It's obviously best in breed in its industry. Expedia beat. We'll have to wait and see how it happens and how it reacts accordingly. Is it going to just fly up to 850, or basically is a sell the news reaction and we move back down to 650? That will get other high beta stocks moving in that direction, which I think has already happened. It's already been the case. And fair warning, you have to look at both sides at this point in time. For the last 3 weeks, that's really been the case. You can't just look one direction, which has been the only direction, which is all along since the beginning of the year, really since late December. We're at the point where rallies can be shorted, big dips can be bought. Understand your ranges. Look at your hourly charts, look at your 15-minute charts, break down time frames. But you can see we're seeing weakness that is shortable on rallies. And two stocks that we've been talking about and we're actually all over this week, Netflix. I talked about it yesterday in the morning meeting, and I was like, you know what? I didn't catch the earnings move. Based slowly grinding down over the next few days, and you can see the 8-day moving average is starting to play catch up on the downside. And I talked about it Thursday morning, if you were listening to my morning call, and I was saying this stock looks to me like a good shorting opportunity. It went down very quickly, quicker than I personally would have liked. But actually, the daily chart shows, gives it justice. Went from 80, 82, closed the day around 75, 76. Today went all the way down to 72.50. It seems like wants to go below 70. Obviously, that was the easier move. Now it's going to digest somewhere. This stock could be a $50 stock. We saw what we have seen, and we are seeing what is happening to GMCR. Every rally seems to be shortable, and I think that's key, and I think that's very important because today I was looking to short it around 28, 27, $28, and I talked about it on the chat. Hopefully you guys are listening. Hopefully you guys are, paying attention. And I did cover a little early, but that's part of my MO. I'm usually much better on the long side than the short side. But I'm very open to the short side at this point in time, and I think that's the key. Let's talk about banks for a little bit. Banks, Goldman Sachs penetrated through its 200-day, came back around, holding right at its 200-day. We'll have to wait and see. Usually the second time it penetrates it or touches it, not as significant in the sense of it doesn't normally hold. It doesn't find as much support. We'll have to wait and see what happens. Had a very bad week this week. It broke out 115, went to 116.50, and I said this on the chat. I was talking about something doesn't feel right, and I didn't put the short on. I got out of my long, and it reversed. And obviously, we'll have to wait and see. This could come back down to the 105, 100 level. We'll have to see if that's the next support level. And then go to the best in breed, JP Morgan and Wells Fargo. Look very similar. Wells Fargo is still hanging in there. Not too concerned unless it gets below 32. JP Morgan below 41, getting some concern. Maybe it gets back down to 39. But possible head and shoulders patterns are happening. Possible rollovers. We have to wait and see. We're not quite there yet. Oil stocks, which showed strength early in the week, basically gave back everything it just made in the last, 2 weeks. OIH, Schlumberger, Exxon hanging in there for the most part. Even some of the, natural gas stocks and some PXDs, EOG, they've given back, decent retracements. They have to find support here in order for them to be relevant. We'll have to wait and see if that happens. Look at the IWM, the Russell. You can see certainly weakness today. Again, support-wise, I would look around 78.30. That would be the previous low that it touched 2 times. And we'll have to see if that holds. This time around, if it touches, I don't think it's going to hold. I think you'll probably get some more selling. We'll have to wait and see. And the Qs were certainly weak today. Apple doesn't help matters. It's a big percentage of that market. Looks like 64.45 is some support. We'll have to wait and see if that's the case. Overall, you got to be a little skeptical, and I don't say that I don't say that often. I certainly like I'm bullish for the most part, but I'm starting to see some dents in these charts, and then you got to be aware, and you can't ignore it, and you got to understand the price action. Right now, what's happening is these stocks that are broken, any sort of rally, 2 or 3 day rally, sellable. Just like we were doing on the other side. Best in breed, 2 or 3 day downtick, buyable. Now, what's going to happen also is we're going to have to see if these best in breed stocks, 2 or 3 days down into key moving averages, actually can find some support for us to really be buyable. And that will be, some of the main tests that I'm looking at is certainly Amazon, as I mentioned earlier. Expedia, I mentioned that also. And some, best in breed. Starbucks, second time around, did not do what it should have done. But we'll have to wait and see. These are still best in breed stocks. We're seeing it, we're seeing a little bit of dents, and that's okay. It's that time of the year where I do suspect the market does find some weakness. It's normal. and at some point, you know, we'll find bases. But until then, either stay out of the way or just be prepared to put some things on the short side. Again, from the swing position, I really have very little on, and I have a harder time putting my shorts on, but any sort of rally and they don't hold, I think you're going to get some really good shorting opportunities across the board. Look at your hourly charts. That's going to really give you the tell. Obviously, you know, the bellwethers, the Apples, the Googles, which didn't hold the second time around, is now, I don't know, when I came in here it was a little bit below 600. Not a good sign. And along that ranks, you know, the Baidu. Didn't have great earnings, a little bit of a bear flag action now, you know, leaning over to the end of that flag. And, you know, you're looking at 128.94. If it breaks there, that'll be low from, you know, a week and a half ago after earnings. We'll have to see. That's not normally a good sign for the stocks. Obviously, some of the other Chinese stocks, Sohu, Sina, not acting well either. So overall, guys, we've been saying it for a few weeks now. You got to be a little skeptical on the long. You can't just go, you know, put a wide net on and just say, I'm buying everything in sight. That has changed. The market has changed. And in fact, we've had a lot of basing the last few weeks and individual earnings that really have stood out, or some obviously have fallen by the wayside. You might start to see a little bit more weakness, which we have not seen all year. And this little pull-in that has happened, we're not quite oversold yet. We're getting there. So you don't want to short 4 days down into a tape. Scott will have, you know, one of us will have commentary on Monday. But you got to know where the market's at and what the tape is bringing us. Hopefully you had a good week. Hopefully you had a good day. Please enjoy your weekend. And we'll see you back on Monday.